GETCRACK. Wake up, motherfucker.
Is Broadcom the new NVIDIA? Let's ask Vivek Arya. He's the senior semi-analyst at BofA Securities and was named Extel, formerly Institutional Investor Research's #1 chips analyst this year. Vivek, it's great to see you again. I'm ready to jump on the Broadcom bandwagon. Would you give me any pause in doing so?
No, I think what we learned from Broadcom's earnings report are two important things. First, that the market is still in early stages, that there are a number of really large customers who can spend 3 to 4 times what they are spending this year. And number two, to be successful in this market, you really need very leading edge IP across computing, across networking, across optics, across silicon. You need scale in the supply chain. And in our view, there are really only 3 companies who can do that. It's NVIDIA, it's Broadcom, and it's Marvell. And the way these clusters are being built out is you have these large hyperscalers who have a lot of internal workloads, and they are building for that. But then they also have a lot of external workloads. And then beyond these hyperscalers, you have enterprises, you have several nation states. So NVIDIA is going after a lot of the external workloads, the public workloads, the enterprise workloads, the sovereign opportunity. But when it comes to a lot of internal workloads and the custom opportunities, Broadcom and Marvell are absolutely running with that. So I think very, very important report, and the company is executing extremely well.
Vivek, there was a lot of talk in the last couple of weeks about whether kind of pre-training for large language models is an area of development that is stalling out, and that we're moving to more of kind of inference going forward, thanks to the likes of Meta's Llama and some open source options. If actually the compute required now to build some of these cutting edge models is much less than we might have thought a year ago. I noticed in this call last night, though, they talked about how 3 of their clients have still mega demand for these kind of AI clusters in the years to come. So could you kind of weigh in on how AI's sort of maturation cycle relates to what we should expect from Broadcom and NVIDIA into next year?
Sure. I think, Kelly, there is a very strong innovation happening on both the training side and the inference side. When it comes to training, it is not just, as you mentioned, not just the size of the models, it's pre-training, it's getting them trained across a larger amount of data. And when there isn't data available, to actually create synthetic data, right? And gradually improve the quality of these models. And it's not just one company that's doing it, right? You have companies that are approaching it from a closed model perspective, such as OpenAI. Then you have companies such as Meta who are approaching it, and Mistral who are approaching it from an open model perspective. So a lot of work that is being done on the training side. And then when it comes to inference, that is where these companies are optimizing it for a whole range of parameters. It could be cost, it could be latency, right? It could be space, it could be power. So, we are seeing innovation across both these dimensions. And then, as I mentioned, the range of customers is also very different. The requirements that an enterprise in a financial industry or healthcare industry has is very different than what a hyperscaler might be doing for search or e-commerce or social, versus what a new nation state in the Middle East might be doing just to train a model in their own language. So that's why we think that it's not a one player takes all market, that there is opportunity across the board here.
To discuss, Steve Sosnick is chief strategist at Interactive Brokers. Great to see you, Steve.
Great to see you, Kelly.
And you're both sitting here joking about bad breath. What is the breadth problem in the market? I've seen that for 9 or 10 sessions now. What's going on exactly?
Well, this would be 10 of 10, where the S&P 500 has more stocks to the downside than to the upside. So coming in, when I did the work, we'd had about 5 out of 9 prior to today. S&P up days as opposed to down days, but yet 9 for 9 in terms of more stocks being down than up. And when we look at the broader market today, on the NYSE, it's about 2.5, 2.7 to 1 decliners to advances.
Wow.
Yeah. So what's going on here is it means that the big cap stocks, because they're so big, because they're so dominant, in today's case, Broadcom is deservedly up, that can paper over a lot of ills. What you want to see in a market is broadening out. We were seeing it for a while, where you had mid caps doing well and you had the Russell 2000 doing well, but that seems to be stalling a bit, and that's telling me that it could be a warning sign. certainly a bit of churn going, a lot more churn under the surface than you think. But I do have to wonder if a little bit of the honeymoon phase of the market is wearing off a bit.
Sure, or with valuations so high.
Exactly.
You know, I think back to ChatGPT was launched in November of 2022, and November of 2021 was when the NASDAQ peaked. And I always think, what if ChatGPT hadn't arrived when it did? I think for sure the economy would have been in recession. The market was already doing terribly. Okay, maybe it recovers, but we would have nothing like the drivers that we've had over the past 2 years.
Well, think about it also. That was November 22 was pretty much when the market bottomed, when this current rally took place.
Coincidence or not?
Some and some. I mean, NVIDIA was at that point kind of, a
video game company.
A video game and cryptocurrency mining company.
True, yes.
And crypto had sort of lost its luster at that point. Obviously, Jensen Huang is great at pivoting. And even by February of 2023, they were leaning into AI super heavily. And now you're seeing it now with the reaction after Google's announcement, Alphabet's announcement with the quantum computing. People are leaning into that. The people love a sexy tech theme, and that was the internet 20 some odd years ago. It's AI and quantum now.
But here's the point I can't even believe I think I'm going to try to make, which is, why not stick with the winners? Like, why worry? So everyone who's been going into small caps, and okay, fine. But look, now they face the rate headwind that might be with us still for some time. They're often not quite as high quality companies. There's overrepresentation from certain sectors that may or may not, fare as great. It just feels like if the technology revolution that's taking place, and thank God it's taking place, why not just kind of be either in the broad index or even in some of those names and just think this is the thematic winner for the next however many years?
Because, trees don't grow to the sky. And a lot of it has been because of multiple expansion. And so let's say of the S&P being up, call it about 70% since November 22. I'm cuffing the numbers a little bit. About 60% of that is multiple expansion.
Wow.
So, I mean, how much yes, those stocks have very, very dominant positions. You can argue almost oligopolistic positions, right? Like duopoly in cell phone manufacturing, in cell phone systems between Apple and Microsoft. Apple and Google. We can go on forever. So they have tremendous market power, but how much can you keep paying for that? And the other issue is, if the base underneath, the foundation on which the market rests, keep getting hollowed out a bit, at some point it sort of topples over. And if people start to leave the market in any sort of way because they lose faith in stocks, that becomes very tricky when you've gotten so top heavy. But yes, in the short to intermediate term, they are money-making machines.
I thought it was interesting that you weren't even that impressed, and I'm relatively with Broadcom's results because, you said, look, they were pro forma. This is not GAAP. I mean, it's just a good reminder that we can get a little carried away sometimes with the excitement that is warranted over how much better they're doing this year versus last year.
I wish I could go through life with pro forma earnings, ignoring any expenses that I deem as inconvenient or telling a bad story. But that's really what pro forma is as opposed to GAAP. And the difference in Broadcom's case, about 50 cents a share on an ongoing basis. So, yes, they make a lot of money. Yes, their guidance was extraordinary. And if they can meet that guidance out to 2027, God bless them. But yeah, this is one of the fundamental things is at some point, we can't ignore the inconvenient stuff forever. And that's why, the way I look at it here is, the weather has been generally very sunny and very
fair,
pleasant. But it doesn't mean you shouldn't carry an umbrella. And one of the things I see in options pricing is there's a big spread between below market puts and at money puts in terms of their implied volatilities. Yet at the same time, the absolute implied volatilities of those protective puts is relatively low. So they're almost simultaneously rich and cheap at the same time. But it's telling me that there are people out there poking around for insurance, or at least not willing to forego insurance.
Joining the $1 trillion market cap club today. After its earnings surge, Stacey Rasgon-Bernstein is with us. It's nice to have you with us, too. Are you surprised at this stock move today? How would you put it into perspective for yourself?
Yeah, you have to remember, people were expecting the guide to miss tactically. They were worried that the AI numbers were going to be weak in the first half, and there may be some wireless seasonality. And a lot of that stuff actually happened, but he had sort of enough arrows in his quiver, Hock Tan did, the CEO, to sort of overcome that. Now we're looking for sort of a probably likely material ramp on their custom AI ASICs into the second half. So the second half looks really good. And then he gave people a real reason to dream. He kind of painted this sort of longer term 3-year picture that if you believe in him, it doesn't seem implausible at all. suggest to get into those AI expectations if you go and significant upgrades to earnings power. And so, I mean, it's up a lot just given where sentiment was, I think, going into the print. But I kind of get it. He gave you a real reason, especially if you're like a long only and you're going to be in the stock for the long haul. He gave you a real reason to own it. So I'm given all of that, like it's up a lot. I'm not exactly surprised that people are chasing it today.
You said of Hock Tan, he might think about shopping for a leather jacket. I see what you did there.
Yeah, I mean, why should Jensen be the only one, right? Hawk looks pretty good, I think, in a leather jacket too.
Yeah, it does speak to how this company is, trying to get an AI lift, and it is a part of its business, but it's not the biggest part of its business, which I find interesting in thinking about how much should a chip company, how much of an AI bump should a chip company get when it isn't their massive, if not core, business?
It's going to be their core pretty soon if they're anything close to right. If you sort of roll the numbers out a few years, I think currently it's I can't remember, they did 12 billion this year out of I can't even remember what the number was. It was I don't know, 30 was third of their business right now. It was more as a percentage of their semiconductor business. If you look at the potential growth that they're talking about, if you go out a few years, though, the AI piece is going to be a material part. It'll probably be 40% plus of the total company. And I mean, it'll easily be more than half of the semi business. Like if you're looking out like 3-4 years, if you believe it. And I think it's important to remember, like, and I made this point here before, this big AI boom that people are talking about, there's really only two companies, maybe until recently, that were really seeing any upside at all. It was NVIDIA and Broadcom. That's it. And if you sort of think through the potential evolution of this market as we go forward, you've got NVIDIA, who kind of owns the GPUs, and the natural second source, it's really looking like it is probably going to be these custom ASICs as the hyperscalers start to build out their own internal infrastructure. And Broadcom's the 800-pound gorilla there. So, I mean, I still think these two guys are the natural AI winners. And for Broadcom, it really is becoming more and more impaired. I mean, this print, if you believe their numbers, this was almost kind of like their NVIDIA moment. Like NVIDIA had their NVIDIA moment like last year, kind of middle of the year, May. This may be like Broadcom's NVIDIA moment, so to speak.
Yeah, I mean, what do you make of what's happened with chip stocks in general over the last few months? The divergent performance between software and semis. Does a report like this help change that? What does?
Yeah, I mean, so semis have been weaker as a group, like in recent months. And you have to remember, performance outside of AI has not been great in the sector, right? I mean, it's really been bifurcated. If it wasn't for the AI cycle, semis in general would be having like a pretty nasty time this year. You sort of look at everything in the different end markets. PCs are kind of meh. Smartphones, at least they're not going down anymore, but you're not getting a ton of unit growth. Industrial looks like we're sort of rolling into a double dip. Like industrial is already quite weak, and it looks like it's getting weaker now. Auto, I've been nervous about auto for quite a while, and actually it's been fairly resilient until recently, but auto is now starting to roll over. Like there aren't any end markets out there that are really, and even traditional data center, like outside of AI, is quite weak. You can even look at Broadcom's own classic networking business is pretty weak. There's nothing outside of AI that is really strong. It's sort of supporting the whole space. And given that context, I'm not necessarily surprised to see the divergence we've seen within semis, and that'll filter into like the different ways that the sector plays off against other sectors as well.
And quickly before I let you go, you did raise your price target to 250 from 195. I mean, we're at 226. It could get to 250 reasonably quickly.
I guess we'll worry about that when we get there. But it's having a good run today, yeah.
Yeah, it is. I know how much you love to talk about your price targets. We'll see you soon.
Yo, what's up? It's late night, Friday the 13th. I guess East Coast only got 15 more minutes until it gets to the 14th. Okay. Only 14 more minutes for you guys to have any bad luck happen. What's up, tropes? What's up? So we got what I kind of wanted for Bitcoin, not really. And we'll go back to talking about Broadcom afterwards, but let's look at Bitcoin right now tonight. Let's see. Okay. Yeah, I was hoping for a move towards 108 and 110, but it tried yesterday, pulled back. Now it's back up again. Yeah, it wants it. It definitely wants it. And I suppose we might have to wait for Powell. I don't know what's going to happen on Monday, if there's anything funny. But this is going to be the last full week trading for the year before we hit into like the Christmas and New Year's breaks. Most people won't be trading those years. And so don't expect anything too wild. So just that's it. One more week. And we don't have very many earnings for this last week. It's just Micron. Let me see what we got here. Yeah, Micron is the big one. So memory chips. You already had Broadcom. Broadcom's already done, and that was really good. So that helped out with the NASDAQ today. You got FedEx. Let's see, we got Nike, BlackBerry. I don't know. I guess still got BlackBerry. Got Lennar. Yeah, I need that for home building. And you got Carnival Cruise Lines. After that, we're done. Supposed to double. Micron's an annoying stock. I mean, I never trust that damn thing on earnings, because it's the most cyclical out of all the semiconductor stocks. Like memory, yeah, if there's not a big order in memories, it's just easy for this thing to just crash. And you look at DRAM prices, it acts like a commodity. So this is why Intel got in the memory business right away. In the 70s, they just threw away all their memory business to other companies, gave it to Japan, and then those Japanese gave it to the South Koreans. Whether it's just a commodity product, it's really not something you can charge a lot of money for. You don't get fat margins on like CPUs. And nowadays, even CPUs are kind of like bleh. You can't really overcharge people on CPUs nowadays because GPUs you can command more prices. So GPUs are like the Louis Vuitton of all the luxury goods of all the semiconductors. So yeah, well, let's see. I mean, it had a pretty nasty top. It makes these big fat tops, just like a gold mining stock would do, or a coal mining stock, or any kind of commodity sensitive. That was down 45%. Yeah, terrible. Right there. If you just bought it at that tippity top right there, whew, flush right down. So I think the last time it got this high was in a .com bust. So in any case, we'll see. We'll see if that means anything. But at least Avago, which got bought out by Broadcom, very nice. And it's one of these. These are very good stocks, actually. Avago. I told someone way back when they were asking about. I already talked about this story. Like they wanted 10,000 shares of a company, and it's like, well, this price is way cheaper than it should be because they had a 10-to-1 split. This was actually $400 back in 2021. I said, well, $10,000, you got a lot of money. If your brother doesn't buy anything less than 1,000 or 10,000 shares, and you had to buy something that I thought was guaranteed to go up in the future, then, and it wasn't that much risk, it was this company right here. So even let's say he bought it then in the 2021, and then he didn't sell up here, right, at 67. It went back down right there again at that support at the low of 2022, and then just rocketed ever since. So yeah, you gotta look at certain things. There's certain risk and reward. Obviously, I could have just told him buy Nvidia or something riskier, or Tesla or whatever. But if he's a conservative person, he's older, I wouldn't take the chance. I would be like, well, just go with a well-run company, reasonable growth, not going to crap out. Then yeah, Broadcom would have been the one. Because yeah, I definitely probably wouldn't have given like a Micron. Like, what the heck would we do here? Like, it's just too volatile, It's just, this thing is just too crazy. I don't think anybody would just stand it. Let's say bought it here. Let's say bought it here, October. Went up, went down below that, went back up, Down, yeah, too volatile. No, no, no. I wouldn't recommend this for any old person. Got some in June. June. It's pretty late. Pretty sure Pelosi got some like way earlier back then. But, you know, you gotta look at other things too. Oh, what was it? Oh yeah, Marvell. That was the one I put in the chat. Marvell. So you gotta look at Marvell. Okay. Here. Marvell. This one also had very good earnings 2 weeks ago. That's what pumped up those semiconductor stocks for a while. Pulled back, jumped back up on the Broadcom earnings. That's perfect. So we have two stocks that might carry us into next year. I'm not hopeful for that though. I mean, Nvidia was what the reason why the whole tech sector sustained its rally for so long with the AI stuff. Now Nvidia is already at its top. It's really hard to pump Nvidia any further. Nvidia will get one more pump, probably. But after that, it's probably way too hard. And we got China coming around the corner. They'll probably start doing tariffs, like say it's a monopoly, this and that, right? It's already starting to do that. It's already starting to say, Nvidia, hey, you're a monopoly. See? So if Trump puts the pressure on, yeah, you're going to have to spread out the risk. So Nvidia is not going to be the guy that you can trust to lead the stock market up anymore. It's been trying. And right now, so far, we've been getting lucky with the software sector, right? The software stuff is booming. Like, and even the crappy one like Sound up again today. I don't know if they have more customers with taco stands, but SoundHound AI, right? Voice assistant, whatever AI company. Yeah. So I'm probably gonna get out because it's almost at 18. So if you've been selling up here, very good. Like once it gets to 18, I don't know. I'll probably dump the rest of them out, you know. And talking about that, like last time I told you guys, yeah, about SMCI, like Sunday night, I was like, yeah, I don't know. I'm probably gonna get most of my shit out. So yeah, I got most of my stuff out. I was hoping it could go up to 50 something, like for a couple days, but the way it acted then, it's just like you gotta get out. And today, after hours, SMCI, there's rumors that they are going to issue more shares or do something to raise funding because they need the cash. So after hours, it was down as much as 10%. So SMCI was below this line here, this purple line, see? So it was getting towards 32. That, I would be interested in buying it again. Maybe. But it is almost to New Year's. I don't know if I'll just wait for the first week of January. Like I told you, December is usually like bullish, but since Trump's election, the market's already been very bullish. I don't feel like you should get too greedy. That's why, like the first week of December, I was like, I'm taking most of my chips off the table, and any leftovers, I'll just leave it there. If they go up, they go up. They go down, I don't care. Just like time to wind down all the trades. And I was telling you guys on Sunday that I would be looking to re-enter a lot of these things if the opportunity presents. So we got one. Maybe SMCI on Monday. It dips around 33, hangs around there. Maybe Tuesday, it dips lower. Okay, and then we get the Powell, and then Powell starts juicing up the market again. Yeah, jump back in. What else we have? Like Nova, same thing. You see that? See, if you got in here, you would have got out here, and then you would have been like, okay, wait for it to pull back, see where we go. Maybe this area is right. Maybe once it starts trying to curl back up to $4, I'll get it. And what other ones we have? What's the other one I forgot? There was another one. There was another one similar to this. NVTS. That's right. NVTS. See? See that? Yeah, you got around here or you got around here. So maybe $1.80 or $2.40. Yeah, $4.50. You wait for the pullback. Yeah, it gets down around the $3. Yeah, $3, maybe. Maybe I'll go for another spin on this one. Okay, so there's a lot of stuff you got to look at, but of course, it's entering the New Year's, so we got to watch. And at the same time, we got to look at stocks that have been doing very well, not only the stocks that have been doing very badly. You know, you got AOI. It's been having trouble at this support here. I mean, resistance, I guess. It's been moving up since $7.04, and I mean, I don't know if you guys were buying at $1.80, but yeah, that goes up to $40. I doubt it. This company is so bad that I don't think anybody was seriously buying down here, and it's very volatile. But yeah, you got to look at some of these guys, and there's a lot of trending stocks too. WGS. I think this is a gene testing company, so 23andMe is crap. Well, you should have been buying WGS. This thing was up. Let's see, $1 to 6,000%. I wasn't in this one, but I'm just saying, like, yeah, there's plenty of alternatives. So yeah, we gotta look at that. Palantir, Axon. I've been hearing rumors that both of these stocks, these are my favorites. These are my favorite longs. They might be being added to the NASDAQ 100. I think if that's true, if those rumors are true, right? I think Palantir is already being added to the NASDAQ 100. I think that news is already out. I don't know if Axon has already, but either way, whatever. Let me double check. Let's see. Blah 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 blah. Okay. Yeah. So these have been confirmed. Axon, Palantir, and MicroStrategies (MSTR). All three of them will join the NASDAQ 100 before the open on December 23rd. So December 23rd, watch that date. So look at that. See what happens then. You might get an extra boost on the 23rd. And that'll be it. That'll be very close to New Year's. And I know a lot of people probably will try to hold as long as they can because they don't want to pay taxes for this year until like January 2nd to sell. It's on you guys, if you want to get out and just pay your taxes or whatever. I don't know if it's a long-term hold, short-term hold, or you're going to have to buy options or something to protect yourself. Because yeah, these have been doing too well, and those things are going to be added to the NASDAQ 100, and MSTR is going to be crazy, I think. So with Bitcoin right now, let me see, Bitcoin, with the way I'm seeing it, I mean, man, is it going to go to 130, 140 before like into the New Year's? That's crazy. It's possible though, but it might be January, the first week of January. It's hard to say. Shoot. I mean, if this thing was at 108 at the close of Friday, I would be more confident. But because it didn't do that, then yeah, you're gonna have to go through the options and futures and all that of Friday. Yeah. What do you think of RG? Yeah, qubits I talked about before. Yeah, I mean RGT. I never heard of that one. Was somebody mentioned that before? Yeah, those things are just too dang volatile for me. That's just personally for me. Is this another quantum computing one? Oh yeah. These things are just crazy. I mean, shoot. Like if you didn't catch it on the IONQ one, that was the first one to pump. Then the other guys just followed it, So yeah, all of them are like, yeah, I don't know, dude. They're only good for day trading, personally, to me. That's like it. Like today, what? One of them went up 30%. Like you just buy it in the morning, see what happens. Hopefully it goes up, and then you just get out and you can make 30%, right? And if you do options on those, like I don't know, you're really going crazy. So I don't know. It's a young person's game. I'm not gonna do them. And I actually have a video at the end where Skrelly just really hates quantum computing. He just wants to short all these stocks. But the thing is, you got to know when to short. Those dumb stocks could probably pump up another 500, 1000% before it goes back down in a significant way. So that's the problem. Okay, I'll put RGTI on the list here. Okay, RGTI. Okay, make a note of that. I think CKJ3 was like wanted to look at Roku, Target, BIB. Okay, I'll put that later. But yeah, if you look at the ones that are scrolling on the screen, you see that QBTS, QUBT, IONQ. Those are the ones I know of. Yeah, I didn't know about the RGTI. I guess I'll add that one to it. Never zoom out to 1 month and mark out the rising channels. Yeah. Yeah, that's what you should do. You should do quarterly too. If you're an investor, you should do quarterly. Quarterly, monthly, yeah. Yearly, quarterly, monthly. That's what you should do. Everything I do here, you can just do on a different time scale. Like you do hourly, daily, weekly, then you do monthly, quarterly, yearly. Yeah. Yeah, you'll see the trends there too. They're all there. They're all fractal. So, day trading is just like you're just scalping money really quickly based on like 3 minute, 15-minute, whatever, right? Hourly. Or if you even more degenerate, you can go like 30-second, 5-second. I mean, it depends. It's all the same. It's all the same. You'll see the same patterns, but then you just gotta be faster and faster. Like when you go down to those smaller time frames, right? You're just gonna have to trade way faster and just like be quick on your feet. You're gonna have to like recognize the patterns right away. It's like, oh shit, long, oh shit, short, this and that. Yeah, I'm not doing that. I'd rather take my time, if I see something. Like look at gold and all that, right? See, it's not time yet, So gold and silver, all that stuff was pumping in the beginning of the week. Now it just went back down. See, so if I looked at the weekly, you see this kind of candle, you're like, what the hell is that? Man, come on. That's nothing then. No decision right there. And possibly means like it's going to go down even further. So, yeah. But then if you zoom in, right, you could go like 10 minutes and there's like, oh, there's plenty of activity here. I could long, I could short, like tons of stuff you could do. See, long, then the end of the week, short. So beginning of the week, Sunday, right? Sunday night, long. It's like short. So you'll figure it out. I mean, that's why you gotta get used to looking at charts and then devise a way where you use the same methodology in all the time frames. So that's why it's like I use the 18 moving average, the 40 moving average. I'll use that on all the time frames, and I zoom out. Whatever, I'll just use the same ones. I don't need to change anything. I don't need to change my settings. But in any case, yeah, so anybody that was asking about silver, I remember Kimmy Cakes was asking about silver and gold, and I said, like, yeah, I talked about it briefly on Wednesday. I think it was the Wednesday stream, and I said, like, well, hold off. So that was all I said. Like, yeah, it's not ready yet. It ain't ready. Now, natural gas. Okay. Okay. So we hit some resistance here. Yeah, natural gas, we did, huh? Yeah, we did. We hit here and we went back down. So now I'm watching very carefully for next week, because I might just go short on this thing for the rest of the year. Short natural gas, and I'll use cold, KOLD. So we'll see. Maybe. UNG gasoline. Okay, so now we got our pullback. So 2 days up, and now we pulled back. So next week, I'll see if I want to buy. So gasoline. So we're about mid-December. That's the perfect time. Yeah, that's the area where we want to go. And then Bitcoin. Yeah, I'm waiting for it. But yeah, a lot of the stocks I've been interested in, like, yeah, I'm interested again. We had a pretty good move on BTDR like 2 days ago. From 19, it pushed to 24. So this one, very strong. Very strong. It's one of the strongest. HUT would probably be the second one. HUT, Wolf, WULF. We got Mara and CLSK still stuck in this kind of pattern, this holding pattern here in its channels. I don't know. We'll see. But MSTR is probably going to be a big one because the way it's moving, it was moving today. Watching this. See that? It's going back, pulling back up, going into this area again and again. The more times it keeps trying to get through here, because the last time we went through here, it was just a quick gap up and just crash right through it. This time it's more subtle, right? It's getting through it. And that coincides with the way Bitcoin's moving. This is exactly what I wanted to see. So once it did that push up over 100K, that was first time doing it Thursday, December 5th. And then we had that pull back down, extreme violence. And then you start building this range here between 95,000 and 100,000. Now we're just doing this where the last piece, this is a tail. This is a tail that's wagging this whole dog. I'm expecting it to get to 108. Once it gets to 108, that's it. We're done. We're ready to move to 115, 112, 115, and 115. Now I'm going to be cautious. I'll be like, is this it? Are you guys done until April? Because once we hit that first cycle in Bitcoin, you got to wait again till April, May. That's the next cycle up. Yeah, because otherwise Bitcoin's just going nowhere from that point. And most of the people will be gambling in the altcoin season. So you should be buying your trash coins. If you look down at the banner down there, you'll see the current list that I have of all the coins. So let's see what was on top. You got HBAR, ENA, XLM, SUI, XRP, Doge, DOGE, OM, BGB, Algo, ADA. So ADA Cardano finally got to the top 10 list. So I finally put it on the banner. So yeah, they are coming. There's a lot of things coming that might pump up very well starting this week. So if you're a gambler, yeah, just watch Bitcoin try to push towards 108, and then these other guys will start going crazy. So yeah, it's gonna be altcoin season still. Altcoin season should still last. Now, let's see what else. So I talked about the I talked about home builders now. I gotta talk about home builders. See this? That's what I was warning about. So on Wednesday, I was looking at this sector. It looks like it's peaking. Looks like it's over for this thing. So this thing was a great run from 2022, June 2022, and we had to end there. December. I said housing prices probably are going to peak. Now, this might just be a reaction because the U.S. Treasury just went crap, Ola. So it hit hit into this area, this resistance. You see this rectangle I drew way back when, just tapped it on the shoulder last Friday and just went straight down. Straight down. So bonds, looks like it wants to hear what Powell has to say. I don't know if it's going to hold this area at 90 for TLT, but the long bonds, you got to wait for Powell. Now, so that's why it's putting a lot of pressure on the home building so far. Yeah, we got this like huge, just like, but it could be a systematic thing, you know, it could be something more serious. That's what we got to wait on. Now we got to look at China. So China had like some new economic data. Terrible. So all that stimulus pump on Monday, Sunday into Monday, it all gave it most of it back. So nope, no confirmation there either. So like I said, we're entering the new year. We're not getting any real confirmation on any of these markets. That's why I'm not in a rush. I'm not in a rush to buy anything right now as a long. Like IWM, same thing, small caps. Nope. XBI. Nope. See? So all the stuff with pharmaceuticals, AI, yeah. I mean, some of them look very good. So we got C3 AI, perfect. It's holding support here. It's trying to stay there and maybe push back up this coming week. I don't know, but yeah, there's no rush. There's really no rush until you got something for the New Year's. The only thing I would be rushing is if I see it change really quickly on Wednesday. So you got till 2:30 p.m. Eastern, okay, on Wednesday, no, December the 18th. That's when we'll figure this shit out. Otherwise, don't worry. But again, watch those stocks you want to get an entry on. Some of them don't have any good entries, like A-Lab. This is like an IPO. This thing's been going up like on a tear since September. Like, looks like it's nonstop. And if we look at those quantum computing stocks, it's just like, what the heck? I don't know. It's a good trend. Seriously, you pull back, you hit that 18 moving average, and then you just bounce right back up 30% almost in one day. It's just like, what? This is insanity, right? So you go that, you go, if I just use the 18 moving averages, it's like, what? No, you just, oh, come on. So I'll just look at this one that you mentioned. Yeah, same thing. Nah, man, this thing. Actually, this one looks like it happened earlier than the election, huh? Okay. Something happened in October. So IONQ was the one that started it. So this thing was September 27th. This is what started everything. Once this company got that government contract, all the other quantum computing stocks started getting hyped. And then once Trump got elected, it just went all crazy. It's just like, come on. Yeah, I'm not touching these things. This thing is just like, yeah, you're taking your chances. So I'll play the Shkreli video at the end where he just goes, he hates quantum computing. He just wants to short the whole dang thing. Okay, so we got other things to play here on the video side. Let's see, markets against. Yeah, we got three more videos here, small ones. Then we'll talk about the yen carry trade video. Okay, and then we'll move on from there. All right. Oh my God! Someone says Rigetti will be the next Nvidia. Oh man, how many times I gotta see this stuff? It's everything is written like an ad. You know, everybody wants to pump something. It's just like fucking shit. Broadcom's the next Nvidia now. Oh my God! What about Palantir? Is Palantir gonna be the next Nvidia? I mean, I saw you put in like that they introduced the leverage ETFs for Palantir. Ah, that's a bad sign. Once your stock gets too popular, I don't like it. I only like things when they're under the radar. I get in, and then once it gets over blasted, I'm out. I'm done. You guys are like, now you guys are insane. You guys missed the boat. You guys want to buy Palantir when it's at $100 or something. And it's like, I'm out. See you guys. Why didn't you buy it when it was $7? Kathy Wood was selling it. Everybody was calling it a meme stock. It's a piece of junk. Yeah. I like it when people don't like it. I'm always contrarian. That's the only way you make the real money. All right. Let's see. Let me find that video. All right. This one.
While next week marks the final Fed meeting of 2024 and the last meeting before President-elect Donald Trump returns to office. For more on what to expect from the Fed, let's bring in Fed Watch advisors Ben Emmons. Ben, great to see you.
Good to see you, Bill. Good to be back.
Hawkish cut. What do you think? What are the odds?
Yeah, it looks like that's going to be the case. Right? The market is very convinced that the Fed will cut rates. I think that was really to do with the data coming exactly in line. You know, when we talked about the last time on the show, I was sort of hinting like think this Fed is closer to a point where they're actually going to skip a meeting or maybe be on hold for a period of time, because especially we do have an economy that stays really strong. And since they cut rates in September, all data has been basically lifted up. So inflation's risen, unemployment rate has not moved too much. So I think the Fed is at a point where it may cut again one time more rates, but then it could hold off. And it's an interesting dynamic going into January, right? Because the January meeting is right after the inauguration, is when the debt ceiling takes place. So it may be really between these two meetings that the Fed decides like to stay on hold for a period of time.
Ben, it's Karen. Thanks for being on. I sort of think they should do a dovish pause rather than a hawkish cut. Is there any difference between those two besides just a little window dressing?
Yeah, that's interesting to say it that way, Karen, because if you think dovish pause and it would be market friendly when you say hawkish cut, it's like, you cut, but you actually are more hawkish than you would perceive to be, and that could be negative. So I think it's in the middle of the two. It's a bit tough to say. I guess that the Fed is sort of saying we can cut rates, but we're still in the phase where the economy is strong enough where we maybe be on hold for some time to assess the data, and you come then sort of down in the middle. I think for the market, it simply means that if they're going to cut rates, it probably will lift the market a bit into year end, because I do think that small caps and industrials and financials will rally on that. And on the other hand, if you're going to hold off from there, people are going to extrapolate that out into the first quarter of like rates are going to stay a little higher than anticipated. That will be probably the negative side to markets.
Hey, Ben, Tim, I noticed you flagged the dollar. I agree with that move. I also think the central bank differentials are starting to show up again, not just BOJ, which can't be hawkish even if they want to, but also what's going on in Europe and some weakness that we're seeing across the EU. What are the implications for the dollar, do you think, next year on either, where it is actually going to be supportive to the Fed, or, talk about multinationals, talk about what that means for bond yields? What are your thoughts?
Typically, dollar, Tim, if it gets really strong, I mean, it's an uplift to the economy in terms of inflation, because you get lower imported inflation on a strong dollar, and it will be a headwind for multinationals in that sense. That's been also the typical effect. With bond yields, I think if you think of a strong dollar, yes, if inflation gets more controlled by a strong dollar, it will probably be positive for bonds. I think going into next year, the anticipation is that the U.S. economy will continue to stay really strong, if not get stronger. And as you mentioned, like we have challenges in Europe, and we got the Bank of Japan sort of sitting here, like they may hike, but not so fast. So the dollar has a lot of room to rise. So I do think it will play out in the sense that maybe somewhat headwind for the multinationals, and ultimately keeping bond yields somewhat capped. But with a caveat there, though, that if you're going to keep cutting rates, you are stimulating the economy, right? So that makes the dollar stronger, but you also lift rates higher. So I think the dollar will strengthen, and the yields are still like poised to go higher ultimately.
Ben, I've long argued that the tight credit spreads are really what are leading this rally in equities, or supportive of this rally in equities. You mentioned the spread between the 2-year and corporate bond spreads. Would you mind elaborating on that a little bit and kind of speaking to some of the risks that might be elucidating?
Yeah, but I think that these corporate bond spreads are not as tight as we've been since the financial crisis. And if you look at this graph, like it seems to be that the history, it may not repeat, but it does rhyme in the idea, right? Because ultimately spreads do widen significantly when the Fed has to cut rates really sharply because we're in a downturn. So we don't seem to be at that point just yet. But one point is to make here is that if the Fed were to keep cutting rates, and I say they do continue because they want to keep the unemployment rate like at this level where we are now, and not letting the situation worsen. A worsening labor market is ultimately going to erode the economy and therefore widen spreads. So I do think we're at this point where spreads will probably stay tight. It's a leading indicator to the broader equity market. But there's some scope here for ultimate widening if you are going to cut faster. So as we were talking earlier, it seems the Fed wants to get potentially on hold for a period of time to see how things play out. But spreads are indeed really, really tight. So it does mean that the economy ultimately is going to drive spreads wider. And that's the big question for next year. It doesn't seem clear right now, but it does seem that spreads are really at the low end of the range.
Yeah, we'll have to talk about credit spreads and yield curves and all that sometime. All right, let's see. Question. Nvidia or BTC? Where you put your money? Long term, probably neither right now. You should have been in that like before in October, like either one. I mean, not Nvidia. Nvidia was been like a year ago. Right now it's all about silver, gold. So for next year, silver, gold, oil, oil companies. I mean, I don't know about crude oil, natural gas, and natural gas supporting companies. So commodities, basically. So we're at the end of the cycle. So when you're at the late stage of an economic cycle, you are in commodities and commodity driven like type stocks. So if you remember from the October stream, this is how it goes. Bonds go up first. Okay. Then stocks, equities, then commodities. And that's the end of the stage. And that after that everything goes down. So that's commodities boom. If you look at the 2007, that's what happened. You saw that's why yesterday I was talking about like the Baltic Dry Index. If you see a lot of ships going around the world transporting copper, coal, bulk dry goods like that, that's the end. That's the end. So then you see like a big push up into those things. And then when you see a sharp decline, you're like, oh, that's it. It's over. That's the end of the economic cycle. Bye-bye. And you just get out of everything. Yeah. So that's what you got to look out for. Once we see oil, gas, all that stuff do the last move, that's the end of it. So that's why I'm hoping for next year. So probably the second half of next year, start doing a lot more gold, silver, and all that stuff again. And then we'll get out. No, I haven't heard about states adopting BTZ as a percent of portfolio. I'm sure I've heard like some states have said like that, like some like municipalities anyway. I don't know about states. Maybe some states have started doing that too. I mean, they are desperate for money, right? They're always going to be desperate. Anything that looks like it goes up, they'll take it. But yeah, this is the end of the cycle right here. We're at the end. They should have been buying like at the downturn in 2021, 2022. That was it. Now we're going back up now into 2025, and then probably peak out 2026, and then we're going back down. It's just like clockwork, man. So that's it. That's what you gotta watch out for. The only question is how big of a boom you get. Like the 2021 from the COVID, the QE, that was like something spectacular. I don't know if it's gonna get repeated. I'm hoping we could get a big boost this time on a lot of the Bitcoin stuff and things into the first quarter, but I'm not hopeful, honestly. So I'll show a video with like what's up with the yen, because we got to worry about the yen now. Japan's gonna raise their interest rates. That's gonna suck out more liquidity, and then yeah, that's why the central banks, they control all the scales, right? You got Jerome Powell on one hand wants to cut rates, and then you got Japan wanting to raise rates. This imbalance has global ramifications on the liquidity, how much people can put into the stock market and all that. If there's no machine that generates all these cash, all the cash that's the credit, it's basically the credit, right? So that's why they were talking about credit spreads in that previous video. You got to watch it. Yeah. Here, actually, let me show you this. So I use like the 2-year and 3-month. There was an old article that said Jerome Powell liked using the 18th month and 3-month, and the 18th month not current, the futures. So the future, man, I forgot what it was. I gotta look that article up. But unless you got a Bloomberg terminal, you won't find the 18th month with like the future pricing of the 18th month yield or whatever. So I just use the 2-year versus 3-month. Whatever, good enough, right? And what you see is like before any kind of like downturn, like even COVID, like it predicted that. It's like it inverts, okay, and then it disinverts. So for anybody that thinks conspiratorially, like thinking like, oh yeah, maybe it was an engineered thing to have COVID so that it gave an excuse for the central banks to have QE again and then create a supply shock that would allow it to create inflation and then start QT at a better position. Could be. I mean, if I was very methodical about it, that makes a lot of sense because they tried to do QT here. You see this? This was in 2018. I don't know how many people remember the time from September to December where QT created a junk bond collapse. So all the junk bonds started collapsing, and when it went to the new year, the Fed said, "Okay, never mind. We're not doing QT anymore. We stopped." And then only until we got to COVID, we restarted QE, quantitative easing. So QT is quantitative tightening. So all the stuff has been created because of the 2008 crisis here, 2007, 2008. So yeah, you can see a lot of this stuff where, yeah, you have this inversion. So that's what this blue line is, or teal. Okay, it's teal line, and then you disinvert, and then like almost a year later, then the collapse starts happening in the stock market. So I'd probably be like around like 100 to 200 days. Yeah, that's good enough to say like. So I'll just say like this is abnormal, right? The COVID stuff. But let's say it's a 200 days. So let's say this disinverts sometime around the summer. It could disinvert now. I mean, the way the bond market is working, it could disinvert like within February or March. And if I see that, it's like, yeah, I got to pull this line. I got to pull it up. And I got to pull this thing up. But if let's say it just goes into the summer, then at least we have until March 2026 when I would think the stock market would probably crash. Hey, what's up, Asvaroon? So yeah, you got to watch these things. And I've talked about a lot of leading indicators and stuff like that. We already went through it in the October streams. So yeah, you can go over and look at those things. I'll probably have to redo them all as one big lesson, for you guys in one stream. But yeah, one of them is the XOY, XOP. Yeah, that's one of them. Yeah, I should do it on this one. I'll do it on this one here. Yeah, save and close. All right. XOY, XOP. Yeah, the ratios is one of the ways you can do it. XOY, XOP. Because so far it's been pretty strong. So if I see this, I'm not going to be like, there's a crash coming. Okay. I'm sorry. I can't believe that. Transport to industrial. Yeah, it's bad. It's been bad all summer. But does it mean there's a crash coming? No, not really. We're not a manufacturing power as we used to be. So, I mean, I'd rather err on the side. So that's the other thing too. Economies change. We used to be a manufacturing country. Now we're not. So a lot of the old indicators that you might want to use, but they say like different things. You're like, well, does that mean there's a crash? Nah, maybe not. So another thing is regional banks. Yeah, another thing we have to watch is regional banks. They've been bad since the whole Silicon Valley Bank thing. So, well, if they get stronger, I'm probably more optimistic about the economy. But if it stays down here, yeah, it's probably like, yeah, we're done here. There's not much juice left in the tank. So yeah, we'll see what happens next year, man. Next year. Okay, what's the next video? Oh yeah, we got a new hire from Trump. This dude's always on Bloomberg TV. This dude from Arkansas, Representative French Hill.
Financial Services Committee race to elect a new chairman is now over after weeks of speculation. Our next guest is going to be the leader of that committee, wields the most influence over banks and bank regulators. Joining us right now is Congressman French Hill. Good morning to you, Congressman. Congratulations on this new role. Want to understand, if you were just to sort of lay out top 3 priorities from your perspective now that you're in the top spot, what are they?
Well, Andrew, great to be with you and Joe. I think first we want to look back at the trouble it is to start a de novo bank or to maintain a high quality return on equity and attract capital into the commercial banking business, and also look at the dearth of companies that have gone public. A couple of weeks ago in Barron's, I read that the Wilshire 5000, our broadest index in the American publicly traded companies, only has 3,700 companies in it. And that's because it's become so hard and so expensive to become public. Companies are staying private longer and becoming much, much larger before they decide to go public. I think that discriminates against small entrepreneurs. I think it makes it harder for families and 401k plans and union pension plans to have more investment options. So issue 1 is let's make community banking and commercial banking competitive again by removing some of the calcification in the regulatory system that's made it so hard to be profitable, serve customers, and be safe and sound. And let's remove some of the barnacles on the ship of state when it comes to capital formation and make it easier to go public and stay public in a more affordable way to make returns for your shareholders.
Where does that priority lie relative to your support, for example, for crypto?
Yeah. Well, I'd say the third one, you asked for 3. I wanted to stop and give you a chance to talk. But the third one is digital assets. We need a market structure for digital assets. We don't have rules of the road. Under Chairman Gensler, we had just regulation by enforcement. This is not helping America succeed, not helping technological advance, innovation for Web3, the use of blockchain, both in publicly traded companies and in financial services. So that is the top priority for us. And our majority leader, Steve Scalise, has it on his first 100 days of the House is to move a regulatory structure bill for digital assets. And I also believe a dollar-backed payment stable coin for under U.S. law as well.
You believe in a Bitcoin reserve?
You know, I don't really, I have to say I know Cynthia Loomis from Wyoming. I heard her give her speech at the Bitcoin conference in Nashville. I understand why some people are attracted to that. I'd have to think long and hard about what the value of that is to the United States or the Treasury. But I am certain of this, that we need a fair-minded, fit-for-purpose regulatory structure for digital assets in this country.
So you mentioned your top priority, or maybe we were going through the list of 3, but I think we might have skipped over number 2.
Well, I said capital formation on the publicly traded space under the SEC. That's 2, yeah. The banking issue is for banks of all sizes. You know, the Biden-Harris administration got away from tailoring, which is to say, have the right regulatory approach for the right risk and the right size institution based on complexity. And they've gone to, again, much more one size fits all.
Broadly speaking, do you believe that we have too many banks in America? I know it's almost sacrilegious to say, because we do care deeply about communities and community banks and the relationship between the banking system and communities and small business. But there's also an argument to be made that, you know, on a relative basis to most countries, we have more banks than just about anybody.
Well, I don't believe we have too many banks. I think the market ought to determine how many banks we need across the country. We have counties that have no physical banking practice. And while on the East and West Coast, people can bank on their phone and get a commercial loan on their phone, I have counties in my state where there's no cell service. There's no broadband. And so the idea that you're going to bank on your phone and get a loan for your new startup small business on a phone is ridiculous. We need physical distribution of financial services capabilities in many, many places in the country where we don't have them. But as I say, I think the market ought to set the financial structure of how many banks we need out there. And that's based on that return. I believe we would have a more competitive banking market if we didn't have the regulatory structure that actually pushes consolidation in the banking industry to the largest banks, because nobody can cope with the regulatory burden.
What do you make of fintechs and arguably, if you were to spend some time with some of the CEOs of the big banks, they would say, look, it's crazy. They would say, we're being overregulated and the fintechs are being underregulated. And they're trying to basically do the same thing that we're doing, except they're doing it without all of the regulations that come with being a bank. So, who's right? Which should it be?
Well, I think in my examples, if you look at public companies, why are there more private companies? Because it's too expensive and painful to be a public company. If you say, why are there so many big banks? It's because it's too expensive and too painful to grow a small bank. And that's all at the heart of too much over-regulation and misdirected regulation that goes beyond simple safety and soundness. Fintech should be able to partner with banks in a safe and sound way and allow their knowledge of AI or fintech applications to either find new customers or serve customers better or do compliance in a more effective way. That ought to be available to small and medium-sized and regional banks, because that will make them more competitive, give them more options to compete with the largest banks in the country that have their own IT and AI departments.
Yeah, I don't have too many thoughts on this. I don't know. So you kind of got a little taste of that in that interview there. So we'll see how this thing goes forward. I don't think it changes too much. ETFs are pretty much where most of the Bitcoin is stored anyway at this point. ETFs holding a lot more Bitcoin than even supposedly Satoshi Nakamoto. So yes, everything is institutionalized, and you can see it in the chart as well. So I was discussing that this week, where you could notice that Bitcoin, the way it moves, is very tied to opens and closes of not only the futures, which it's already did for quite a while when futures trading on Bitcoin was started doing, but now it even has price movements that are coincides very closely with the opens and close of the New York Stock Exchange. So basically, ETFs and options on those ETFs. How long is that bond cycle? No, there's no typical. There's no typical. You just have to figure it out on your own. This is what you're gonna have to study. You're gonna have to study old charts. You look at the old charts, you see how the bonds moved, you see how the stocks moved, you see how the commodities moved, and every cycle is different. Every cycle is different. So you'll see, but for the most part, everything is tied to the real estate cycle. The real estate cycle is the King Kong of cycles, and they run on an average of an 18.5 year cycle. And I'll play a video of that sometime down the line when we get closer to that time. We have about 2 more years when we have the peak in the real estate. So once you see that cycle turn down, everything's going to turn down. Like, that's the super cycle that you have to care about. Stock market usually has a 41-month cycle. 41-month cycle discovered by Edward Dewey. I'll probably play a video about that sometime. So 41 months, about 180 days, I think, right? Roughly 180 days. Yeah, roughly. So you'll figure it out. But we are going into probably the commodity cycle pretty soon. So once I see the gold and silver start jumping, that's when you know. I mean, you look at the George Bush era. George Bush era was when silver and gold primarily. I don't think silver did all that well. Gold, went really good. And that led up into the 2007 collapse. So you have to remember in that era, stocks weren't doing very well. Mostly, it was going sideways during George Bush's terms, and because we were spending way too much money into like Iraq and all that, Afghanistan. There wasn't much money going into our own economy, so that's kind of why. And so most of the time, it was just oil and So it's a lopsided, right? It's like, dude, so the whole cycle was just all commodities. It was basically stocks doing nothing and then all of a sudden commodities, and then crash. So yeah, not everything's the same. It's not going to always look like the same. So that's a textbook. When you're looking, also tropes, when you're looking at a textbook, they'll just show you these perfect sine waves. No, they never look like that in real life. Okay, that's a challenge. All right, every time it's going to be a little bit different, So you're going to have to know. Yeah, you're going to have to get experience, and you can easily get that experience by reading charts. We have charts going all the way back to the Dutch West Indies like company, right? We got the British Indian, like freaking, what's that? The British, what is the British? What's that company? British India Company? Yeah. Those are companies, They weren't colonies. Those are actually companies. You could buy stock in it. I could buy stock in the British India Company, right? So I buy stock. I support the British Empire. I buy stock. I support the Dutch Empire. Yeah. So yeah, we have historical records all the way back when. So all economic cycles, all the same thing. It's just we got different names for things. We have different technologies. We have a different representation of and quantifying of what things are. I could quantify something into seashells, right? I could quantify it into like pieces of silver. I could quantify it into like fiat, like we do now, and we can quantify it into Bitcoin or whatever we want. So, but in the end, it's all about trade, exchange, things like that. Yeah. Okay, so let's go. Also, and if you want to look at more Bitcoin, I covered this before, but the U.S. Department of Defense banned or redacted a thesis made by a military student. Okay, so this is a thesis. It was called Soft War. Yeah. Okay, so now the paperback originals are like $300 a piece somewhere. So you can read that. I already covered it. And let me see. Blah, 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 blah. Okay. Here, I got it. Here, and you can read it here. The original here. I think the link still works. I don't know. Jason P. Lowry, Soft War, a novel theory on power projection. So he discusses how Bitcoin can be used as a way to project power across the globe. So this thing, the Department of Defense or whatever, they redacted it. So you can get it, but it will just be like they just take out all the cool parts, I guess. But this is the original. I think it's the original. So yeah, you can go read it yourself. I don't know what that has to come into play of the future of U.S. power projection in the world, but yeah, Bitcoin could be something you might have to look at. Okay, let me go get my video. All right, let's go. We're going to talk about Affirm. Affirm. Not a bad stock. Pretty good stock. So buy now, pay later. I think the last time I was talking about buy now, pay later was another company. So you can look back at the previous stream. I did buy now, pay later interview with another. I think it was a German person. I don't know, CEO. But here's the Affirm one. Oh, did I download it? Oh yeah, I did.
News just out right now from buy now, pay later company Affirm. Leslie Picker is here. She joins us now with more.
Hey, Becky, good morning. Two trendy areas in finance, fintech and private credit, coming together in a new multi-billion-dollar joint venture. A firm just announcing its largest ever capital commitment with a new partnership with private credit firm Sixth Street, which is investing in $4 billion worth of loans over the course of 3 years. Sixth Street will commit capital upfront for a firm to underwrite short-term installment loans. These are between 4 to 6 month timeframes. Once paid back, the capital rolls into a pot to make more loans, which amounts to more than $20 billion that a firm could extend over the life of the deal. Now, I'm told by people familiar with the matter there is a ramp period. They won't start selling loans until 2025. As private credit has exploded in recent years, alternative asset managers are increasingly looking at non-bank fintech companies that invest that capital. And fintech firms are opting for what they see as more efficient and diversified sources of funding that they can scale up or down based on demand from their end users. PayPal, for example, recently announcing a similar deal this summer with KKR for loans they originate in Europe. A firm's funding capacity has grown 130% to nearly $17 billion over the last 3 years, and its gross merchandise volume growth for the first 9 months of the year was 34% higher than last year, but 2022 levels, guys. 2022 level. And last year, but still below 2020.
Man, I don't know why sometimes StreamYards does that. It just cuts out the last little bit of a video. I don't get that. Sometimes it keeps having that bug. Okay. We're going to go on to Skrelly, and he's going to talk about how he hates quantum computing. So any of you guys in those stocks, yeah, be warned. He hates it. He thinks you should short it. Well, that's his opinion.
Stocks and other securities in an unauthorized manner. I don't appreciate it. I don't condone it. I didn't allow it, but people are buying them anyway. Despite my warnings, some of you have continued to engage in such atrocities. I'd appreciate it if you'd refrain from any more unauthorized purchases of securities that I did not clear. We'll start maybe.
All right, so yeah. If you didn't clear any stocks with me, don't buy that. All right. Okay, before I play that, never mind. I got one more video to play. The yen carry trade. I gotta play this one first. This is more important. Okay, the yen carry trade. The implosion of that carry trade was what caused like the big drop in around July to August. So I am definitely, like I said in the beginning of the video, watching the Bank of Japan, Jerome Powell, all that stuff, what they're going to say. And they're going to say stuff this week. Jerome Powell on Wednesday, the Bank of Japan Thursday night, Friday morning, I think. So.
Introducing the 3-part options course with Hans Albrecht. Get access for free by scanning this QR code or clicking on the link in the description.
Dollar is still hanging out above this 106 level. Gold is still inching higher. It's doing fine on its kind of sideways to higher, but for most part, we expected this into CPI and then FOMC next week. Gold loves loose monetary policy, by the way. And we are expected to have that 25 basis point rate cut. Wouldn't surprise me at all if we have a pause in January to allow for Bank of Japan to do a bit of hiking. So I have been very, very, very suspicious about the Bank of Japan doing any hikes this year, despite all the talk. But last night, they had a whole bunch of data that came in, very warm to hot as it relates to their economic data. So let me just kind of show you this, what I mean. Their prices are rising, right? 3.7 from 3.4. Their PPI month over month is also very firm versus year over year. The business survey came in hot, fire, flames at 6.3 versus 4.5%. This is all kind of indicative of be careful what you
Hold up. I gotta re-get that in this fucking. Let's see. Come on. Nah, I gotta reload it. Sorry, guys. Looks like StreamYards. Yeah. Come on.
Business survey came in.
Okay.
Their
There you go.
data. So let me just kind of. They had a whole Bank of Japan to do a bit of hiking. So I have been very, very, very suspicious about the Bank of Japan doing any hikes this year, despite all the talk. But last night, they had a whole bunch of data that came in, very warm to hot as it relates to their economic data. So let me just kind of show you this, what I mean. Their prices are rising, right? 3.7 from 3.4. Their PPI month over month is also very firm versus year over year. The business survey came in hot, fire, flames at 6.3 versus 4.5%. This is all kind of indicative of be careful what you ask for kind of thing. They've wanted inflation. They have been in the grips of deflation. They really still are. But the point is, this is helping to push the BOJ into justification to hike, although I still think we had 50-50 chance for this meeting, which is December 19th. I still don't think they will, especially not with Fed cutting, but that's a 50-50 bet, not great odds. Anyway, you can see that their increase in all of their data has been just all across the board, pushing up. Non-manufacturers index also, their Tankin, which is kind of a popular survey, rises to 30 from 19. You can see producer price index information is just kind of hot. I think I did 1 by 2 by accident there, but you get the idea. So wouldn't surprise me if the dollar yen does try to move into this kind of 155 area one more time. If you can kind of see this, Besant was picked as U.S. Treasury Secretary in this neck of the woods after the Trump election. Okay, U.S. Treasury Secretary thump, and now it's kind of moving its way back up here. Wouldn't surprise me at all if it makes it up to this kind of 154.72, 155 area. Then they do a little hike, will they? That's the big question. Yield differentials and all would be very much changed after that. I think it would get firmly rejected and start to move lower. And I don't think it would just come back down below 152, which is this key level. Very important. We were up here in 2022, again in 2023, same time frame, right? This was September, October, and this was October, November before the Fed pause and Yahtzee. Anyway, long story short, we did this very, very strong reversal and dump on the yen carry trade unwind. And I think we'd get a little bit of a replay on that. So this was the Trump thump, and now we're moving back up. Would not surprise me at all if we came all the way back up to this kind of 155 area, and then it gets rejected when they do a mini hike. I don't know how you want to put it, but this is where it would come back down. Ultimately, it would come back down below the 152, 147, which is very strong support. I think it would actually slice through it and make its way back down to 140, 137. So that would be the yen carry trade unwind part 2. We're not there yet. And if they don't hike, they'll push it off a little further. But that's my bet, is that this will rise up and overshoot into January. And then if they do hike, which odds are increasing if Fed pauses, then this will roll back over and we'll have a yen push. And the yen push would be very much a de-risking of that whole concentration risk bet, right? In our MAG 7. So that's the result, I think, that I've got in my head as the dollar yen up and then back below 152, 150, 147, 145 on way to 140 potentially. And then that would, of course, not only bid the yen, but it would also bid bonds. I don't think this is until February, though, because the FOMC is January 29th. Yes, it would also bid gold and silver. Baseline bet, it would have a good little support there for yen and bonds and precious metals, and it would not be very supportive for equities. But that is literally January 29th. So we're not talking about next week. I'm not worried about a yen carry trade unwind into the end of the year. I'm just not. We're talking about next month, at the end of next month. So make hay while the sun shines.
Join.
Hey, so you got the message. We're all good until next month. All right. So end of January. maybe. So if we get through this week and everything is good, I'm just looking forward to January. Now, you'll probably see some stocks start pulling back down on the first week of January into the second full week when everyone gets back from vacation, because most people won't be trading on the 2nd and 3rd of January. So probably you might see some rumblings, but then people might start taking profits because they feel fine and watch from there. But maybe that's too optimistic. Maybe a lot of people will start just taking profits because you should have been doing really good this year on a lot of stocks. Okay, let's go back to Skrully and his complaints about quantum computing.
And that would have surely signaled it was a really good short. So that's unfortunate. But I did get enough hate that it's probably a good short or an okay short. There are very few people that understand quantum computing. It's a tough field. It's sort of trading on vibes right now. There's kind of the second derivative that's really important with vibes. Like a stock can only go from 1 to 6 or 8 to 30 and stay there if there's sort of incremental buyers, because what tends to happen is the guy that buys it at 30 is very impatient, as he should be, and kind of has to sell the stock in a week or a month or something. There are some of those players or buyers that will hold it. Maybe Fidelity realizes it's a great buy at 30, even though it was just at 8, and they buy 10% of the company. That does happen. But most market participants are there because of momentum, and they will leave soon, whether there's stagnation in the price or rapid decline in the price. They're leaving either way. So their only way they stay is if the price keeps going up. And at some point, they sort of leave. So in terms of quantum specifically, like company specifics, we can get into that. But I think the problem is that this industry doesn't yet have an application. And it doesn't mean that one will never show up. But it more or less is a tool that doesn't exist yet and is still looking for an actual sort of solution. I've used QuizKid. I've done Q-Sharp. I did a big quantum journey while I was actually in jail. Renting these quantum computers isn't as hard as it looks. You can actually rent. IonQ only has one online functional quantum computer. It's trading for $7 billion. They're more or less behind in the quantum race. They're probably the best managed company, though. It'll be interesting to see how IonQ sort of works out, but it's just very unlikely that we're going to see real progress in this space. So sort of to take a step back and think about computing in general, and this is not as much my space as there's other people like Jeff Bezos and some other guys that really, really know what they're talking about. Maybe even John knows. But one of the problems with quantum computing is that you have to find a problem that's applicable to it. And if you do this, you can be really successful. NVIDIA got to a $3 trillion market cap on Matmul's. So, if you do actually get the right technique, you can do amazing things. But you're never going to run Windows or a web browser on quantum computing. You're not going to play a video game on it. That's not what it was built for. It was sort of built to do certain problems, or, we don't know what it's built for. It's just a cool trick. But one of the things we're thinking that it could be used for is to do decryption. And there are only so many parties that want to sort of play in that field. And you sort of know who they are, sort of governments and things like that. And then the other, so like integer factorization or Shor's algorithm or ECDSA or any other sort of encryption scheme. And there are quantum proof encryption schemes. And this is something that post-quantum cryptography, PQC, is something that NIST has advanced. And there's actually a recent big, love to hear from Baze, actually. NIST has recently amped up its sort of PQC sort of preparedness. And many players like Ethereum. Ethereum has spent time, this is a cryptocurrency. Ethereum has spent a lot of time thinking about what's going to happen after quantum. So, there is a countermeasure to sort of integer factorization. And so that's sort of the one obvious thing that sort of jumps out. But there sort of is a countermeasure. And right now, classical computers are not just better than quantum computers, but quantum computers can barely factor very, very small numbers. So the biggest dilemma here is this idea that, you have to get some kind of number that represents the logical qubit to physical qubit ratio. And we actually don't have that yet. There is no ratio in any existing quantum computer. We have 100 qubit quantum computers right now. And we're hoping to get sort of 200 or something like that. But it doesn't seem obvious that we can engineer 1,000 or a 5,000 or 10,000 qubit quantum computer. And with physical qubits, there's probably going to be something like 1,000 physical qubits to make so-called one logical qubit. And with a logical qubit, you probably need 2 logical qubits for every bit you're trying to break. So if you're trying to break RSA 2048-bit, you'd maybe need 4,000 logical qubits. And if your ratio of logical qubits to physical qubits is 1,000, you would need 4 million qubits. And it's just not clear that we can go from 100 qubits today to 4 million qubits later. Qubits are really hard to sort of work with. For one, you have to be near absolute zero for most of the schemas, not all, but at least most of them. You have to be near absolute zero. Working in that environment's not easy. It is possible that there is a way to engineer something that scales fast. It doesn't seem likely given the current pace. So the idea of like the one killer app you have here, which is decryption, which is not like something you or I would ever want. We're not code breakers. We're not national security. The only people that want this are governments. And that doesn't mean that it's a small business, but I think of it, instead of thinking of it like NVIDIA, where there's general purpose, I actually think of it more like Bruker. Bruker is a company that makes NMR machines. They're not exactly computers, but they're very, very expensive machines used in usually material science or biotechnology. And they're multi-million-dollar machines, and they sell very few of them. And it's not that great of a business. Quantum computing is sort of like that. Just because NVIDIA did really well with their sort of coprocessor, if you will, using a sort of term from the past, doesn't mean that quantum computing will be the best coprocessor. It is amazing in a way, and so is NMR. NMR is amazing. But we've had all kinds of failed coprocessors over the years. One was the sound card. Sound was like a fundamentally different thing for computers to do. So there was a bunch of sound cards. Sound Blaster was the popular brand a long time ago. And we don't do sound cards anymore because the math that you need to do audio is just sort of math that you can do anyway. We've had all kinds of modems and other ideas of coprocessors, including math coprocessors that no longer sort of exist. So kind of what made GPUs special, I don't think necessarily applies to quantum. Now, it doesn't mean that we can't, figure something out years from now. But I think that this 1,000-to-1 ratio was not changed by Google's new advance, which is certainly exciting and interesting. But one of the things Google tends to get a lot of is this random circuit sampling. So random circuit sampling is very contrived. Very few people, even in quantum, think it's a real sort of useful tool. And so when Google says there's they're doing calculations 100 septillion times faster than classical computing, they're not wrong, but they're also being very misleading because it's not a generic computational sort of technology. It's this very one-off specific computation that is not useful. So, you could not use these machines for anything. You could have all the free time you wanted on IBM's biggest quantum computer, and you don't have any ability to do it. So why invest in IonQ or Rigetti, or why short them? This is kind of my framework, and I think it sort of makes sense to me, at least. We'll see how you guys think. In the 70s, Intel came out with their processors. There were a lot of companies you've never heard of that were also coming out with similar processors at the time. And the fact that if I name these companies, you wouldn't be able to remember them mostly, unless you're a student of the semiconductor industry or something. They all sort of flamed out very quickly. And all these companies sort of tried to exist alongside Intel and failed. Intel wasn't a huge company then either, by the way. but they outcompeted everyone else. And if you notice the GPU market, there's only really two players, arguably one player. So what's going to happen with quantum? We just don't know. So to pick a winner now is even it's actually crazier than picking a winner for sort of transistor-based semiconductors in the 70s. And like we're not even in the first inning of quantum. And so to pick like, oh, okay, IonQ is going to win this race, or IBM is going to win this race, or Google's going to win this race. It's so uncertain that it's sort of preposterous to even think about. Someone will win this race. There's no doubt about that. But sort of mooning these stocks because of Google's contrived thing is very, very kind of dumb. And I think that as the dumb money figures this out, that piled into the stock, they will pile out of the stock. And they also just do this naturally. You know, after a stock's gone up a lot, it tends to just come back down because, again, there's a half-life that passes for momentum traders. There may truly be some investors that are thinking that the quantum revolution is upon us. This is just like AI. There's been many winters in quantum and many springs. And we're sort of in a winter for quantum in a lot of ways. These companies couldn't go public. They had a really hard time raising private capital, and they went public through SPACs. This is not Databricks. This is not OpenAI. This is not companies that had so much capital they didn't know what to do with it. These are companies that struggled. There was no obvious use case for quantum. Very few people wanted to wait 10, 20 years to see their investment pan out. So depending on how fast you think you can add qubits to a system, if you take Moore's law, that compute doubles every year, which is faster than Moore's law, you know, you still wouldn't get to 4 million qubits within 20 to 50 years, depending on how fast it doubles. So conservatively, you'd be looking at 50 years before you could crack 2048 RSA, which in 50 years, we will not be using 2448-bit RSA, I don't think. So it's kind of a dangerous space. It's really just science fiction, really. And there have been many attempts to make, you know, non-traditional computing. There's reservoir computing. There's the stuff that Beth is doing. There's, you know, analog computing in general just has been around for a long time. It's in some ways older than digital computing. So it's had this renaissance with this idea of thermodynamic computing. So, you know, there's all kinds of people trying to do optical computing or DNA computing or whatever. And the reality is, you know, NVIDIA is not going to quit. So even though right now you have this tremendous interest in like decryption, so far GPUs aren't horrible at decryption, and they will get better, and CPUs will get better. So you still have the backdrop of traditional chips advancing. So that's not going to change. Now, will they catch up to the theoretical quantum capabilities? Probably not, even at really fast paces. But for what application? You know, I don't think quantum computers would be very useful for most algorithms. So again, as a trader, God only knows what will happen. But you know, I do think that people on Wall Street tend to look at this stuff and get excited, and then they ask people who really know what they're doing, and those people say, yeah, it's just not going to happen. This is really boring, and you shouldn't be interested in this. So, you know, I sort of don't have a pulse on Wall Street like I used to, mostly because I just didn't think it would be helpful. But this is one of those situations where talking to a bunch of hedge funds and seeing if they're actually buying this or shorting it would actually be very interesting, as well as long-only firms. And I think in general, given that these were SPACs and like nobody wanted to touch these for so long, I don't think that anything's changed. And I think that it's just sort of speculative money chasing. But we certainly might see real people get interested in this. But I tend to think it's not the case. And it was just people chasing the Google announcement. So that's what I think about quantum. I don't know if anybody has.
I think that your whole point about the coprocessors is very true. Like, one thing that I think is interesting is if you look at CPUs and GPUs, they're like very similar. It's a much more like recent and minor architectural fork than like going from classical computers to something like a quantum computer or thermodynamic computer or whatever. So the way I see it is like you had all these economically valuable problems that were just done by humans on paper or in their brain really, really inefficiently. And like you can replace a lot of those with either CPUs or GPUs, and like maybe one will win out over the other over the course of decades. But it's very unclear to me that you can just replace a large proportion of computer tasks with another type of computer. So kind of like you said about the sound chip, I'm not even sure that any other type of processor will ever be more valuable than classical computers.
Well, what's really interesting about the GPU example is a lot of people are saying, oh, you get to own the next NVIDIA. And the problem with that theory is that NVIDIA wasn't the next NVIDIA until very recently. So NVIDIA was actually a struggling kind of crappy company until, this sort of AI revolution, deep learning revolution happened. So NVIDIA, the reason Intel never bought NVIDIA and, they just sort of looked down on it was a gaming chip. And the gaming industry was just only so big and, it didn't make sense for these to be anything more than, say, a $5 billion or $10 billion company. And then Matt Moles became the most important thing ever. And what do you know? It happens to be that they do them the best. So now it's a multi-trillion-dollar company. But that was 20 years, almost 20 years, I'd say, after the GPU was invented. And parallel processing with, the GPU architecture was sort of found a bigger application. And that'll probably happen with quantum someday, right? It is almost certainly going to happen. But it's probably going to happen 20 years, the same way it happened with GPUs, sort of 20 years after you have something that looks like a general purpose quantum computer, which is maybe an oxymoron or a misnomer. So I think like the idea of attaching NVIDIA to the QC boom that we're seeing, this very temporary, possibly temporary boom. In fact, I'm almost certain it's going to be temporary because real booms and real like springs versus winters, and I would argue we've been in a quantum computing winter, including the Google quote unquote quantum supremacy paper, which got them a huge amount of flack. When that paper came out, it was, the word quantum supremacy it obviously made some DEI people pretty angry too, but it was really a kind of like thing that IBM was, for example, very upset about because circuit sampling is not quantum supremacy. And there are people, we have friends doing, circuit sampling of Gaussian noise and things like that. And they're not saying they have any superiority. So I feel like, circuit sampling is kind of like a black eye, and they did it again, regardless. So it was just something that was surprising to me that, they're really sort of sticking to that. But in any event, I mean, I think these stocks will come back down because the winter is really when and I hate to glorify VCs because I hate them so much, but I think the winter's thaw when VCs will actually put like hundreds of millions of dollars to work in a space. And there is a space they're doing that in right now, and it's AI. And sometimes it's AI hardware, but it's certainly not in non-traditional computing. And, the winter's thaw then. And again, these companies had to go public through SPAC, which is, if you didn't know, the lowest quality possible way to go public. I don't even remember if these were Chamath companies or not, but regardless, they couldn't find a banker to put them through the traditional process, which is really crazy. Wall Street should be able to find you, $100 million or $200 million from high-tech investors that, in the ZERP, this was also in the ZERP peak where like anybody could go public. They failed to do so and just did these SPACs. And, all the companies that did that, like Ginkgo and others, what is that, Virgin Galactic, all these companies' stocks dropped dramatically. Because they were sort of low quality companies, and some of these companies were basically going bankrupt. I was interested in these companies in private rounds, but I'm a technology fan. I really love this sort of science fiction technology, but I didn't expect anything like this to be practical for a very long time. But nurturing it along the way wouldn't be such a bad thing. As we go from 100 to 500 to 1,000 to 5,000 qubits, you start to get a little bit more utility. And I would say everybody in the chat that you can go and sign up
up for IBM Quantum, and they give you 10 minutes of machine time for your free sort of free account. And Qiskit and the other sort of languages or tool chain to write quantum code isn't that hard. And if you need help, the AI code generators actually do understand it. So, there are like Manning and like O'Reilly books on writing quantum code. So, it definitely takes a little bit of adjustment to think about like Hadamard gates and C0 and different sort of primitives. And you're not going to be writing a video game on it or something like that anytime soon. But I'd encourage you to see for yourself what's the biggest number you can factor in today's top quantum computing environments. You can get the IonQ computer for $7,000 an hour on AWS Bracket or Breakout. So in Bracket, you have to register it and like, pre-order it or whatever, but you can reserve, I guess that's the word, you can reserve it for an hour. And if you want, you could split it with a friend or have your corporation do it or whatever, but you'd probably want to have all your code ready. And you just, they honestly should break it down into minutes, but I can understand that that's why they want to make the most money. But these programs run in a second or two, even if you run thousands of iterations. And you'll see that these programs are you really can't do anything. And once you do that, I think you realize, like, why would I pay $7 billion for a company that has one working quantum computer? And this is IonQ. And there's people that think that the ion trap is just not going to work, period. And that transmon superconducting is the way to go. So, nobody's sure, nobody knows. But you have you're so far away from success that 7 billion is just a stupid number. You don't know anything about having logical qubits versus physical qubits. You don't know if you can actually get to 1 million qubits, physical qubits. We don't know what the best substrates are. We don't know, anything. But so 6 billion, 7 billion, that's money that would make sense if you knew there was a path to, say, being the next NVIDIA. There's no known path here to like actually get there. We just don't know. And so typically when you have something like this, this is sort of a crazy price. It's a very bubble-like price. Could it get bigger and crazier? It's hard for me to fathom the science experiment that's worth 20 billion or something like that. A long time ago, there was a company, so here's a decent analog. There was a company called Human Genome Sciences, known by its stock ticker HGSS and affectionately known by traders as Hugsy. HGSI, Human Genome Sciences, this was Craig Venter's company that decoded the human genome very quickly. So in essence, what happened with Hugsy was that they decoded the genome, and the company had this like $20 billion company, $20 billion valuation. And it ended up sort of falling to, I want to say around $1 billion. And they had just pretty much trad drugs that were like very basic, and they eked out a win on one trad drug and sold the company for like $2 billion. But it went down 90%, and they basically had to be traditional again. And so I think something like that's going to happen to all these quantum computing companies. Most of them will go to zero, but one or two of them may sort of like drop 95% and eke out an existence over the next couple decades. But it's just so unlikely that these companies can find a way to succeed. So that's kind of how I feel about quantum computing.
I think you're kind of talking around this point, which is the same way Steve Jobs talked about Xerox PARC and the same way that OpenAI has essentially used the technology that Google developed is just because you know how to develop the technology and push it doesn't mean you know how to monetize it. And so if we're only talking about qubits and we're not talking about what are the new tasks that are being monetized based on this technology being developed. And so, maybe Google gets a pump because they put out this hype video, but they've already kind of demonstrated in the AI space that just because they can push a technology doesn't mean they can monetize it. Arguably, Microsoft has done a much better job monetizing by partnering with OpenAI, the technology that Google developed themselves. And so I think you're kind of describing this hype cycle, which is okay. there's great new technology that gets developed in the ecosystem. Everyone thinks and fantasizes about the current tasks we could accomplish if the technology went further. But ultimately, where all the value ends up getting created is someone comes along and figures out a new task that can be done using the technology at a certain breakpoint, and essentially kind of siphon that off and do their own thing that no one else was thinking of yet. And so you get the hype on the technology being developed. People realize, okay, there's no actual use cases yet, but the technology keeps getting developed in the background. And so that's kind of this winter you described. And then eventually someone comes along, they're really creative. They find a small niche to start building out a new value prop in. That's where the VCs start to dive in again and actually grow the space. What do you think?
Yeah, I think that makes sense, and we've seen that cycle before. But to me, like, all it takes is Navy or Army or NSA or some of these customers saying, we're not getting anywhere. We're dropping our purchase, or even keeping purchasing flat is a disaster for these stocks, because like IonQ is 40 million in revenue. If that goes to 20 or something like that, the stock goes to 99% down. Even if it stays flat for 3 or 4 years, that's a disaster. So superconducting, 3D printing, these are other kind of miracle technologies that didn't end up making stock market winners. So this is like very reminiscent of that to me. So, I'm short the whole industry, and I'm actually a huge fan of this industry. So, I have a huge heart for, frontier science, but I also, don't like buying high prices. This is something that sort of belongs in academia or in corporate academia, like, Google's sort of labs and Microsoft's labs and so forth. And, IBM's trying to, they're probably doing the best job of all, them and Honeywell. They're all trying to do something, but like simulations is another space that could make a lot of sense for quantum computing. But if you know the simulation space from pharma, at least, there actually isn't a ton of benefit to doing simulations. So if you run something like GROMACS or Amber or other molecular dynamics simulation software, you kind of get the gist of these things relatively quickly. Would it be cool to simulate like many seconds of reality? Sure, of course it would be. But like if you have a protein ensemble, and you want to simulate, I don't know, 100 microseconds or 100 nanoseconds or something like that, you can do it, and you get what you need to know. You're on the atomic level. A lot of things don't change over huge time scales, and you get what you want. And this idea that like pharma or material science would change a lot with a quantum simulator is just not real to me. And then, between that and encryption, you're really running out of stuff to do with these machines that's useful. There are no other obvious kind of killer apps. Some people say the traveling salesman problem is a good example of like a very NP hard problem that quantum computers could do better at. But the reality there is that we have very good approximations for traveling salesmen. So the exact solutions are not available, but without maybe something like a quantum computer. But the close enough solutions that we use now are available. And unless you have a very bizarre traveling salesman problem, which I think probably don't exist, like even UPS or FedEx or Amazon, like that have very complex routing problems, they get good enough performance, and they don't need a quantum computer to get a better one. So it really feels kind of stupid to me that like maybe we vacuum all the data that China has and they vacuum all our data, and we keep this in some, I don't know, big S3 bucket, and in 50 years we can decrypt it. Well, that's a little silly too, because if you think about the cable leak that came with WikiLeaks, like that was supposed to be all this like really secret cables that were like super, sensitive, and it turns out there was nothing in there that was interesting at all. And I think people sort of underestimate the value of decrypting old information and things like that. And by the time it's 2050 and 2060 and we have working quantum computers, we'll be on lattice-based encryption or some other post-quantum technology, and the mousetrap just gets harder. And so the other funny thing is, I mean, you theoretically could do 4,000-bit RSA, you could do 9,000-bit RSA, every power of 2, 4096, 80, whatever. You can keep going up and up. It gets a little impractical at some point, but you certainly could keep growing key size, and that's what elliptic curves are there for too. They're smaller size to the same hardness, theoretically at least. So you get some really big elliptic curves that keep your data safe, even in the old paradigm. So that's without moving to a new form of cryptography, which of course, is very important for cryptocurrency, where a quantum computer cracking, so to speak, Bitcoin would be something that would be somewhat alarming. But there are some protections there. There's the old P2PK method, which reveals public keys in the transaction ledger in the program or the script. So the P2PK has been basically obsolete since the advent of Taproot, but with P2PK, there's still plenty of old P2PK transactions that you could theoretically reverse, but you're still talking about like 20 years from now, and then theoretically, once that happens, like the Bitcoin, community can fork, even hard fork if necessary, but just fork the sort of ledger into a new status or something like that. So it'd be fairly easy to see like somebody who cracked the entire thing.
Alrighty, guys. Okay, it's about 2 hours, huh? Finished through the video. Still 4 people watching. Oh, amazing. Okay, well, good night. Good night. It is Saturday morning. I better go to sleep now. A lot of drama apparently happened tonight. If you're in the know. But we'll see how it goes. Next week, I'm sure there's plenty more real life drama that we'll have to get through before Santa Claus comes around to town. Okay? I'll see you guys Monday, maybe Sunday night if something really interesting happens on the futures and Bitcoin. But yeah, I'll see you Monday.
Feel like I should, feel like I should, feel like I should, feel like I should go. Go. Feel like I should go. Feel like I should, feel like I should, feel like I should, feel like I should go. Feel like I should go. Feel like I should, feel like I should, feel like I should, feel like I should. Feel like I should go.